You can have the best trading system in the world. You can have the best risk management in the world. You can even be funded with $500,000 and still blow your accounts. Why? Well, because the markets aren't fair, they are random. And that randomness causes what I call clusters of chaos. Streaks of wins and losses that mess with your head, mess with your confidence, and your ability to execute. In today's video, I'm going to break down why randomness destroys so many traders, how to spot it in your own results, and more importantly, how you could structure even prop firm trading so you never let randomness take you out of the game. So with that being said, let's hecking dive in. Most traders think if they've got a 60% win rate, they are golden. But here's what they don't realize. Even a system with a 60% win rate can produce 5, 6, 7 losses in a row. And that's not a bad system. That's just statistics. Let's make this simple. Imagine flipping a coin. Heads you win, tails you lose. You'd expect heads, tails, heads, tails, heads, tails, right? But in reality, it normally goes something like this. Heads, 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 tails, heads, tails, tails, tails. You get the picture, right? It's completely random. Now imagine each flip was a trade. Even if your system has got an edge, meaning that over 100 trades or more, you are profitable. In the short term, it could still look like chaos. And that's what causes so many traders to doubt their system and check out early. Randomness comes in clusters. A cluster of wins followed by a cluster of losers. And here's where things get very dangerous. In a cluster of bad luck or bad trades, most traders will panic. They lose confidence, they start changing their plan, tweaking entries, switching pairs, and basically destroying any edge they ever had. But in a cluster of good luck or wins, they get euphoric. They start risking more, breaking their own rules, and that's when you can end up blowing your account. So whether you're in a winning streak or a losing one, randomness is constantly trying to pull you out of balance. So for a second, let's connect this to prop firm trading, because this is exactly why so many prop firm traders are failing their challenges. You've got a 10% drawdown limit, you take 3 losing trades in a row, which is a normal statistical outcome, but your brain doesn't know that or doesn't react like that. It says, my system is broken and I'm failing. You panic, you revenge trade, you overtrade, and now it's not randomness taking you out, it's you. Randomness exposes emotional instability. And that's why at Blue Wedge, we teach you to expect clusters of wins and losses. Here's something most traders never actually calculate: expectancy. Because it's not your win rate that makes you profitable. It's what happens over time, over many trades and many accounts. Expectancy equals your win percentage multiplied by your average win minus loss percentage multiplied by your average loss. So let's say, for example, you win 50% of the time, you make 3R when you do win, and you lose 1R when you do lose. That means that 0.5 times 3 minus 0.5 times 1 equals 1R per trade on average. That's your expectancy, and that's a profitable system. Even though you are wrong half of the time, you will still be profitable over time. But if you don't understand randomness, those 5 losses in a row will be enough to make you quit a system that has got an edge and will be profitable over time. But you're quitting just because you're hitting 5 or 6 losers in a row. You can't remove randomness, but you can neutralize its impact. And here's how the top traders do it. Number 1, they risk the same amount every time. Never increase your risk after a win or reduce it after a loss. Keep it steady, because that's how randomness can eat you alive. Number 2 is diversify your edge. Trade across pairs, sessions, and even accounts. Now, if you're doing this with prop firms, we like to call this prop farming. Multiple challenges running parallel. As long as you have a system with an edge, this is going to improve your expectancy. Number 3, automating. Here at Blue Edge Financial, we have an expert advisor called Titan X that runs our accounts for us, that trades for us. So we are taking out all the emotions, and it makes it a lot easier to allow our edge to play out. The other way you can do this if you're manual trading is make sure you are sticking to a very strict set of rules that you never go again. Number 4 is normalize drawdowns. Build your mindset around probability. A 5-trade losing streak doesn't mean your system's broken. It just means your sample size is too small. So keep trading. And number 5 is stack expectancy. Focus on the setups that have more chance of hitting whatever your risk to reward ratio is. So for example, if you're a 1-to-2 or a 1-to-3 RR trader, then make sure you're picking those setups that you know have a higher probability of hitting that. Every trader comes into this thinking they are different and they can beat the system, but these traders get humbled very fast by randomness. The truth is, trading isn't about predicting the market. It's about surviving the randomness long enough that your edge can play out. And that's what separates the gamblers from the professionals. The professionals don't try to control luck. They control risk. They expect the chaos and they prepare for it. So the next time you hit a losing streak, don't panic. Just expect it. The question isn't how do I avoid bad luck, but how do I survive it and stay in the game? And that's exactly what our system here at Blue Edge is doing every single day. We have an edge, we play it over and over, we increase the amount of accounts we're taking, and as a result, we have over 1,500 people in our community that have been funded with prop firms. Because we know there's randomness, we expect it, and we trade through it and let our edge play out. Now, if you want more information about our system, make sure you go over to www.propfarming.com, and there you'll find an amazing demo video that explains everything, and you can fill in an application form if you're interested in joining our community. If you found this video helpful or interesting in any way, please just give us a like and make sure you are subscribed if you haven't already. With that being said, guys, I will see you in the next video. Bye for now.